Hi guys, welcome to my channel. Welcome to my online course, Financial Accounting Made Simple. My name still remains Sanyaolu Oluwafemi Akintunde. And on today's course, we are going to be looking at users of accounting information and qualities of good accounting information. So we are going to be looking at that today. Let's dive right into it. So we're going to first of all be looking at the learning objective. Now, what is the learning objective? At the end of this course, students should be able to have a working knowledge of who are the users of accounting information, what are the qualities of good accounting information. Then, as usual, you'll have practice questions and assignments just for you to test your knowledge on whether you understand everything that has been taught so far in this course. So the outline remains the same. We're going to be looking at who are the users of accounting information and what are the qualities of good accounting information. So this right here is a pictorial representation of the users of accounting information. So I'll be explaining every component of the users of accounting information as the case may be. So we're going to start with the first one there, which is with the investors. Now, who are investors? Investors are those that have the intention or that have the potential of investing in a particular organization. And the reason why they want to invest is so that they can have a return on their investment. In accounting terms, we call that ROI, return on investment. The ideal thing with an investor is that an investor wants to know if he invests in a project, in a company, whether or not he's going to get value for his investment. So value may be in terms of the reward, the returns that comes to him at the end of his investment. The next set of users we are going to be looking at is we are going to look at the community. The community would want the accounting report to be able to know the ability of the company to meet certain requirements. For example, the corporate social responsibility of the company to the community. Now, what do we mean by corporate social responsibility? Now, corporate social responsibility is there are those responsibility that the company owes to members of that particular community. So, for example, being an organization in the community, some organizations provide scholarship facilities to members of the community. Some organization provides employment to members of that particular community. So those are like corporate social responsibilities that the organization perform to its immediate community. Then we talk about suppliers. Now, who are the suppliers? Suppliers are those that provide services or provide materials, critical input for the organization to be able to process. Now, the suppliers will want to know how liquid is a particular organization. That's the ability of the organization to be able to pay back whenever they are supplied either goods or they provide them with services, just to know the ability of the company to be able to, if they are liquid enough. So by checking the accounting reports, by looking through the accounting information, they may be able to look at, oh, what are the assets, what are the liabilities, what are the current assets that the organization have, and the ability of the company to be able to meet their demands. Then we now can talk about the employees. Now, why would the employees need accounting reports? Sometimes employees may want to compare jobs with industry standard. They want to compare jobs with competition, with competitors. They want to know what is the salary that is being paid to them and what is the average salary that is paid in the industry, just to have an idea, a working idea of the salary that is being paid across the industry, and that will give them an idea. Also, they might not just want to compare salary. It may also be to compare work, the terms of reference, the terms of employment. What are those other benefits that other companies are offering that the company may not be offering, and that may just bring about the decision to whether leave an organization or continue to work in that organization. So then we go to the creditors. Now, for the creditors will want to know if an organization borrows money from them, if they will be able to pay back the money that has been borrowed. So creditors lend the organization money. So a creditor, for example, can be a bank. The bank may borrow the organization some money and expect that at the end of the period, at the end of the period of the loan, the organization is capable of repaying back the loan that has been granted to that specific organization. Then we now have the board of directors. Now, the board of directors and the management. The board of directors are those that are charged with the responsibility of running the affairs of that particular company. They are charged with the day-to-day running of the affairs of the company. Now, why would they need accounting report? The board of directors will need to prove to the shareholders that they have been running the organization the way they are supposed to, and the organization has been making profits over the past few years. Now, where the shareholders feel that the board of directors are not running the organization in the direction they want them to, of course, the board of directors could be sacked or could be relieved of their duties. So in order to check the performance of the company vis-a-vis, compare them from one year to another, to be able to make a decision on whether to retain the board members or to look for a new set of board members that will accomplish the company's objective. So that is why accounting information may be required by shareholders in order to be able to assess the board members if they are running the company exactly the way they are supposed to. We can then talk about the customers. Now, why would customers need accounting information? Customers will need accounting information because they want to check the performance of the company. How has the company been doing? Is the company doing well in terms of the nature of goods that they are producing, in terms of the reputation of the company, in terms of whether or not they are still providing value or services the way they are supposed to? So in order to know if to continue to patronize them or to look for another set of companies that can be patronized. So that is one of the reasons why customers may decide to access a company. Then we can then talk about the analysts. Now, analysts are those that analyze the accounting reports. They are those that look into the records of a particular organization in order to analyze it and make informed decisions. So for example, the analyst may analyze the accounting report and provide it in order for the investor to be able to make up their mind on whether to invest, or to provide it to the creditors to determine whether or not they want to borrow money to such an organization, if the organization has the capacity to pay back such loans. So it is important for an analysis to be done in order to be able to come to terms with that. Then we can then talk about the government. Now, why would government need accounting reports? Government will need accounting report because they want to know. The primary essence of government is to what? Generate revenue through taxes. So they want to know if the company has been making profit and if they have been remitting their taxes as they should. Also, government will be interested in financial regulations. If the companies have been adhering to the rules and regulations that has been set by those that are charged with the responsibility of setting these rules, and to ensure that the company are keeping to the rules and regulations as may be required by the company. So those are some of the reasons why accounting information may be needed by the users of such accounting information. Now, so let's look at some of it here. We have the shareholders. Even though in the previous slide we did not have a section for shareholders, I think I mentioned shareholders a couple of times. Now, shareholders are the owners of the business. Now, why would shareholders be interested in the accounting report? Of course, they want to know what dividends will be accrued to them, what profit has the company made. Are they going to be paid dividend this year, or what is the capital appreciation that their shares have made over a particular period of time? So for the government, we have already agreed that the government may want to look at if the company has been paying tax and how much tax has the company been paying. Also want to know if the organizations are compliance with the rules and regulations as been set by the necessary body that is governing such company. The suppliers would want to know how relatively stable an organization is in terms of liquidity. How liquid is the company? How liquid is the company in its ability to be able to meet up with payment of its bills on a regular basis? We've talked about employees. Employees will want to know if the company is capable of paying their salary, and what is the industry standard in respect to salary. What are the incentives that are put in place? What are the employment terms? What are in the employment contract? What are the benefits, other benefits apart from the salaries that they are collecting from the company? What are the other benefits that may be accruing to the employees? Then the loan providers such as banks. The loan providers, they are those that provides funds for the organization. The ability of the company, are they liquid enough to pay back those loans that have been provided? Those are part of what the loan providers will be looking at. Then potential investors, those that want a return on their investments. If they are making an investment, they want to know if there is going to be a return on investment, ROI. And at the end of the period, if the organization will be capable of making returns on their investments. I hope we are following. Like I said, accounting is very, very easy. Just try to follow as we go. Then characteristics of accounting information. We are going to be looking at some of the characteristics of accounting reports. The first one we have is comparability. Now, accounting reports are expected to be comparable between one period to another. We may want to compare last year's report with this year's report. We may want to compare the last 5 years' reports in order for us to be able to make a decision. So comparability is very, very important. Then whether the reports are reliable. The reports that are being prepared by management. Don't forget, at the end of every accounting period, an auditor is expected to sign off that this report shows a true and fair view of the accounting report that has been presented by management, that has been prepared by management. So that gives it a level of credibility. So whether the report is reliable. Then whether the report is relevant. Of course, accounting reports are expected to be relevant, because if it is not relevant, there is no purpose for which you are preparing such reports. So it has to be relevant. It must be relevant for the purpose from which it is prepared. And what is the purpose? To determine profitability, whether we are making profit, to determine if the organization is doing well. Then another thing is understandability. Accounting reports are expected to be understandable. When you pick up the report, you may not need a third party to explain what it is to you. Once you pick up the report, you should know, oh, this is the profit of the year, this is how much goods they have sold, these are the assets, these are the liabilities. All these should be put in simple and clear English terms, such that anybody reading the report would be able to follow through on the report without any ambiguous words. So qualities of good accounting information. So let us look at some of the qualities of good accounting information. Now, accuracy. The accounting report must be free from errors and mistakes, must be free from omissions. Accounting information must be free from errors, mistakes, and omission. It is important, if you are preparing a report that people are expected at the end of the day to make a decision on, of course, you are expecting that the report must be free from errors, so that people don't make decisions that are haphazard. Then relevance. The accounting report must be relevant. We've talked about relevance before now. It must be relevant for the purpose for which it is prepared. It is very important for an accounting information to be relevant. Otherwise, there is no point preparing such reports if it is not relevant. Then it must be comparable. You must be able to compare accounting reports from one period to another, from one industry to another, from one sector to another. It is very important we are able to make comparison, so we can compare two competitive organizations together, the reports. We can compare 2 years reports together. Completeness. In order for an accounting report to be very, very useful, it must be complete. all necessary information must be stated in that particular report. Don't forget, people will be making decisions on this particular report. So it is important that if people will be making decisions on this report, it must give full information with respect to that particular organization. Timeliness. Accounting reports must be prepared on time. It must be prepared at a time when it is needed, because accounting information that is prepared after the time is useless. So let's imagine that I need to make a decision today in respect to how much I should have in my bank account. But if I don't have the necessary information to make that report today, that means I will need to wait till tomorrow. But as tomorrow, it is too late because I need to make that decision right now. So accounting information must be what? Prepared timely. It must be prepared at a time when it is what? Required, when it is needed. Then there must be clarity. Clarity means it must be in simple language for anybody to be able to understand. You don't need a third party to interpret it to you. You should be able to know where the assets are, what is the value of the assets, what is the value of the liability, what is the value of the owner's equity. All this should be stated in a simple and clear terms. Then we now have flexibility. Flexibility of accounting report means that the accounting report should be subject to what? Changes. It should be easily changed. It should be easily changed to adapt to the situation. So it must be what? Easily changeable. That is what I mean by flexibility. It should adapt to a particular situation. It should be easy to adjust. That's what I mean by flexibility. Now, these are qualities of good accounting information. So for our assignments, you can see our assignment there can be submitted via email or WhatsApp, as the case may be. The first one is briefly explain the attributes of good accounting information. So you should be able to explain the attributes of good accounting information. Then also, number 2 says that the accounting process generates financial reports for both internal and external audience. Identify some of the groups in each audience, that's each category. So what we're asking you to do there is to differentiate the external audience from the internal audience. What we mean by audience is users of accounting information. Who are the internal, who are the external users? So you should be able to get that. Number 3 says that explain 5 qualities of good accounting information and list 5 users of accounting information. That should not be a problem if you have been following exactly everything that we've been looking at. Then number 4, which is the last question, it says which of the following is a characteristics of good accounting information. So one of these is not, or one of these is a characteristics of good accounting information. The other 4 are not. So it's left to you whether you'll be able to get which one it is. So thank you very much, guys. We have come to the end of this particular class. Remember, failure is the ability to start again more intelligently. Your mindset is what differentiates you and somebody else. So mindset is the difference between ordinary and extraordinary people. And numbers don't lie. It is whatever you put in that you get out. So you must ensure that you do everything is required for you to become successful. So if you are here to subscribe to my YouTube channel, you can subscribe. You can click the link below to subscribe to my YouTube channel. That's my WhatsApp number and my email, just in case you need to send your assignments. Be rest assured that I would respond if you send your assignments. You can also follow me on Instagram to get information in regards to how you can be successful academically. So I'm signing out. It's Sanyaolu Oluwafemi, and I'll see you on the next side of the course. Thank you very much for watching.